Over the last 2 years, Bitcoin is up 100%. Exactly what you'd expect if you increase the money supply by 50%. I mean, if you increase by 100%, so you decrease the value by 50%. Like, that makes sense. Okay, but Bitcoin's down since November. Well, of course it is. Everything's down since November because we had these massive liquidations of over-leveraged speculation. And when you get a margin call, here's the tricky thing. You don't get to sell what you want to sell, right? Peloton, you bought it on margin, it went down 90%. You can't sell Peloton to make the margin call. You got to sell gold, you got to sell bonds, you got to sell Bitcoin. So the things that didn't go down then suddenly go down. So now everything's going down, correlations go up, but that's a temporal thing. Now correlations are reversing again. Friday was a great example. Markets were down, Bitcoin's up. Bitcoin's up a lot since mid-June. That's what I will say was the bottom, 17.5 candle that day. And we made a series of higher lows and higher highs. And I think crypto spring is here. Now, we're still a ways from crypto summer when we get another parabolic move up, but that'll come probably in 6-9 months.
Yeah, I'm just looking at the chart right now, after it spiked back up. For the last couple of weeks, we've really been consolidating a pretty narrow range, kind of flirting with the 24 and change and like 22 on the bottom. To me, I got in this business over 20 years ago, reading charts. That's a nice little coil there. So if that breaks above that 24 and change, let's call it, that is going to be a big move, in my opinion.
No, Matt, it's such a great point. I was actually looking at the same chart this morning, and I tweeted out 6 weeks ago something that made me very unpopular. So there are chart patterns. People say, it's just voodoo. I'm like, no, it's a representation of human activity, and it's real. And so there's a very famous chart pattern called a descending triangle. And it's really simple. So you have this base level of support, and the price will fall and it'll bounce and it'll fall, but it'll bounce a little less, and it'll fall and bounce a little less, and it'll fall and bounce a little less. And eventually you have this descending triangle, right? And when you get to the very point, you get two choices. You can either break out and go back up, or you can finally break through, and it's like super fast. And so I tweeted out on the Thursday before Father's Day, look, the longer it stays at this 30,000 level, the more likely we are to break down and hit 15, kind of like we did in crypto winter in 2018 in November. And sure enough, over the weekend, we went all the way down and hit that. Now, we didn't hit 15, we hit 17.5. So call me a liar. But from that point, now we've made the reversal, which is we've made this series of higher highs and higher lows. Well, now we're pumping up against this 24 level, and we've got an inverted ascending triangle the other way. And to your point, if we break out of the 24, there's a lot of upside on the other side.
Yeah, I mean, again, like I used to always get put down. My first job at Charles Schwab as a broker. Like, what are you reading these charts for? It's voodoo, and I kept trying to explain to him that's showing all buyers and sellers right there. There's so much information reading those charts. It's absolutely mind blowing.
We live in a world where everybody wants everybody's data, right? People pay huge amounts of money to know what I did this morning walking around my house. Like, really? I walk to the same 4 places. I brush my teeth. I go to the bathroom. I eat breakfast. I have a cup of coffee. I get to my car. Why do you care about that? Well, we don't know how fast or how long you were brushing your teeth. Whatever. Data is very valuable. So an accurate record of all buyers and sellers, how is that not extremely valuable? And they say a picture's worth 1,000 words. It is, right? I can interpret that picture a lot faster than I can go through the data and see what all the bids and asks were and where they got filled. But I can see chart patterns, and patterns do repeat. It's like cycles repeat. And the one thing I am a little worried about, Matt, that it's the one thing that just keep me up. I sleep really well. People say, what keeps you up at night? Nothing. I sleep really, really well. I'm blessed. But I am saying, if you continue down the path of over tightening, right? The Fed, bad decision. You're restricting liquidity at the government level, passing bills to throttle innovation and wealth creation, right? Why would you do that? Why would you ever pass a bill that decreases the incentive to innovate and create income and wealth? Why would you want to tax that? it's completely illogical, right? Why would you ever want to discourage people becoming wealthy? You should never want to, because those people create lots of jobs. That's where all the jobs come from. And so if we want to succeed societally, what we want to do is encourage innovation, encourage business formation, not discourage like this nonsense they just passed over the weekend. So I do worry that we're in a really bad place from a policy perspective, and that presents risks to investors, which I think are smart to listen to you and be careful out there.